Hello everyone, welcome back. Okay, I am probably 24 hours behind with this, but hear me out. Snap just cut 16% of its workforce. CEO, Evan Spiegel, cited AI efficiencies. What happens? The stock jumped 10%. We have seen this movie before. This one is just cut on a sharper budget. But jokes aside, this is serial. A series of offenses we keep watching play out in this space. Which is exactly why I built this series called AI ROI, Show Me the Math. So we can debunk the math together. Debunk the idea that you are behind because you do not have 800 agentic workflows perfectly harmonized inside your company. And debunk the Wall Street reflex that pops a stock every time a CEO drops AI efficiencies into a layoff memo. And finally, debunk the narrative before it becomes the quarterly earnings call. Let's get into it. Snap's story went viral yesterday on LinkedIn, everywhere, covered in every mainstream outlet. Everyone quoted the cuts. You know what? I was part of that noise too. And we've seen a lot of individual quite tragic stories because a lot of people have been affected. But I want to take a little bit of a different angle. My take is different. I'm here to break the story with the actual numbers. Last month, I ran the math on Block's 500 million version of this bet. Today, Snap is showing me a more dangerous one. Here is why. Here is what Snap announced. 1,000 employees out, another 300 open roles closed, target savings, $500 million annually by the second half of 2026. Restructuring charges of 95 to 150 million, mostly hitting quarter two. The CEO's letter framed it as AI making the company faster, reducing repetitive tasks, letting the remaining team move more quickly. That is the press release, of course. But here is what is structurally true, in my opinion. Red flag 1. This is not AI strategy. This is activist investor pressure. Irenic Capital management, holding about 22.5% of Snap, spent the last few weeks publicly pushing the company to either divest or wind down Specs, the AI glasses subsidiary, and they flagged $3.5 billion in cumulative investment and roughly $500 million in annual cash burn at Specs. The number should look familiar. The $500 million savings target announced today exactly matches the Specs cash burn the activists wanted offset. When the savings figure mirrors what an outside investor demanded, down to the dollar, AI is the framing. Cost cutting is the action. I don't blame them. I get it. It's a lot of money. We need to optimize. Red flag 2. The AI deal that was supposed to anchor Snap's AI strategy just collapsed. In November, Perplexity agreed to pay Snap $400 million in cash and equity to embed its AI search inside Snapchat. That's roughly 7% of Snap's 2025 revenue. It's a significant figure. It never rolled out. Term disputes. The deal is dead. Snap is now restructuring around an AI thesis at the exact moment, and its probably largest AI revenue commitment evaporated thus far. Block at least had Goose, internal AI tooling, 4,000 active users, somewhat documented productivity data. Snap had a partnership that fell apart before the launch. Red flag 3. This is round 3 of major cuts in 4 years. 20% of the workforce in 2022, 10% in 2024, 16%, but might be a little bit more to be honest, plus a little trim of 3% in 2023. Nobody talks about that little silent layoff round as well. And each round had a different rationale. 2022 was strategic reprioritization, 2024 was in-person collaboration, today is AI efficiencies. The little trim is unheard of. But round 3, the rationale stops mattering. The people left in the building know how this movie ends. They're not building, they are updating LinkedIn. I don't know about you, but when I see 3 flags, I do not want to walk in. I do not step into the water. I do not walk into the story, and I certainly do not invest. This is the rehire cut button. I covered in the block analysis, and Meta ran it, Google ran it, IBM ran it, and Klarna ran it. I just see this all the time. Klarna replaced 700 customer service agents with AI in 2023. Look up. And it looked great on paper. But 2025, they were rehiring humans because customer satisfaction dropped 22%. This is not a failure mode at the end of the day. It is the default outcome when you restructure without real-time AI performance visibility. Which brings us to the only question that actually matters. Where is Snap's goose? Where is the internal AI tooling with documented adoption, productivity baselines, and quality metrics that would justify removing 60-90% of actual headcount? If it exists, obviously I haven't seen it, maybe it does exist, maybe it's buried somewhere between the filings, but they didn't publish it. Block did, but Snap, at the end of the day, has not. So when the AI strategy is invisible from the outside, the AI savings claim is too. That's how I look at it. And the bet is only as good as the measurement underneath it. Block had infrastructure and still flagged the risk in their own SEC filing. Snap is making a structurally weaker bet. Activist pressure on top, a collapsed AI partnership underneath, round 3 of cuts. Full stress test is in the article. Show me the math. Cheers.